This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I have David Richter with us today, and he's going to talk about some money things. So, hey, David, what's going on, man?
Yeah, hey, Brian, thanks for having me on. Really excited to do this today.
Yeah, great. So, hey, David is the author. Actually, got the book here of Profit First, and he also runs a business that can do fractional CFO. So, David, why don't you tell us a little bit about what you have going on?
Sure. So, my background is a real estate investor myself. And so I created a fractional CFO company, which I can get into that story if we want to. But that's basically a company that helps investors, first of all, know where their money's going, because that's one of the biggest stresses in a real estate investing company. Where the heck is my money? So getting clarity around that, putting KPIs, key performance indicators, reports, a dashboard together. We also implement the Profit First methodology. Go figure, since I wrote the book, Profit First for Real Estate Investing. So we use that as a cash management system. And we also help people like, what are you doing for the long-term wealth? But because everyone asks, what's a fractional CFO? Fractional CFO is, first of all, CFO is Chief Financial Officer. So it's someone that's kind of like a partner with the business owner, but making sure the financial side of the business is running like a well-oiled machine, and that you're keeping money. You're not just making the money, but you're actually keeping that money, instead too. So you're not just like running deal to deal. But then also fractional means that it's on a part-time or a fraction of the basis of a full-time CFO, meaning full-time CFO, it's going to be $150,000, $200,000 a year, full-time, 40 hours a week, and most entrepreneurs, or small business owners are too small for a full-time CFO. But a lot of people are still, even if you're just doing maybe, 100,000 or more a year, are still too large not to have some type of CFO or some type of financial person on their team to help them, like with the finances and talk on their language and like get it to be so that way they know exactly where they stand financially. And that's where we come into play, because we're a fraction of the cost of a full-time CFO, and we are there on like more of a weekly basis than day in, day out, 40 hours, 40 hours a week. So that's kind of like what we have going on. To the book that is out, Profit First for Real Estate Investing, officially just my love letter to the real estate world after being in this world and real estate investing for the past 10 years. So that's kind of what I have going on right now.
All right, that's cool, man. And the fractional CFO stuff is huge because, yeah, like you're saying, people have that gap of when they're just starting to when they get really big. And You want a lot of people, like I even know back in the day, like you got all this money coming in. It's like, well, at the end of the month, it all is spent. Like what happened?
Right.
So yeah, it's good to have people people helping you out with that kind of stuff. Dave, how'd you get involved with real estate? Like how'd you get involved with everything?
So I've always been a reader my whole life, and someone handed me the book Rich Dad Poor Dad in college, and that was it. My mindset was changed. So just like a lot of entrepreneurs and real estate investors. So that's what started it all. Started work. I got my first house then pretty soon after that when I read it, because I'm like, I want to actually do this stuff. So I bought my first house, fixed it up, rented it out for a while, but then I actually lived in there. That was the first house I bought like before I was married, and like the first house I lived in with my wife. We lived there for a couple of years. Then I lease optioned the property once we left. And that was a cool experience because my tenant like paid on time, then cashed me out 6 months later with his option agreement. So he had the lease, so he had the rental and the option to buy too, and he exercised that option. So that was really cool to me. So then I started working with an investing company too, because I wanted to see how a business ran, and I wanted to get this insight and like see the different parts of real estate investing. So we took that company from about 5 deals a month to about 30 deals a month, doing over 300 deals at our highest point, which was a lot of fun being in that business. I got to see a lot of different things and sit in a lot of different seats, from acquisitions, dispositions, selling the property, project management, property management, transaction coordination, the finance seat. Like I got to sit in all the different seats. So I got to be very well versed in like the small business and what the different seats are in a real estate investing company. And we did every type of deal too. So I've been a part of over 850 deals now of like turnkey, wholesale, fix it, flip, all the different things inside of real estate, lease options, rentals. So I've seen a lot of different things in the small business world, and now seen a lot of different deals done. So that's kind of got what I jumped in with both feet, getting into that company, and then we grew and scale it. It's honestly how my story starts of why the financial side too, but that's kind of where I started in real estate investing.
That's cool. And you know what? That's huge. Like anyone listening. So if you're in a real estate business, especially investing space, like you can have a financial guy, but the odds of you having a financial guy that actually understands this side of the business is huge. So it's a very rare combination.
Yeah. Yeah. We've seen that a lot too. We have a lot of people on our team, but at the end of the day, we're the one, getting to cross train and and show them exactly where we come from. And it's fun because like now I understand where the real estate investor is coming from. Like I was there, like we were doing 30 deals a month, but we were making 6-7 figure months sometimes and spending 6-7 figure months too, so it was like not a pretty sight. So I mean, I could talk all day on like what you were talking about too, Brian, of like you got a bunch of money now, but at the end of the month, where in the world did the money go?
Yeah. Which you know what, it's crazy because I was just reading David's book and talk about, well, you know what, give the high level on the profit first for real estate investors. Like,
sure.
Like what's the high level overview?
So this system is made up of two parts, and I'll talk about the mindset first. And if Brian, if you want me to go into the practical side too, I can go into that. But first thing is, as a real estate investor, if you're just starting out or you're down that road, we love our formulas. And a formula, a bad formula that we've been fed is sales minus expenses equals profit. Meaning I make a sale, I sell this property, I pay everyone else and their mother, and then I have what's left over as profit. So hopefully I have that at the end of the day, year or whenever, some nebulous event out there that's just off in the distance in the far, future. That's how we live as entrepreneurs and real estate investors. We're always looking for that someday. Someday I'll get that, I'll get the profit. Someday I'll have the money or whatnot. And that's just that creates such bad habits in our business. We are always thinking of our expenses first, and we're always like living on the edge and like over the edge sometimes too. And it's just in some bad habits that we create for ourselves. Profit first formula, the one that we should be following, the one that is the magic formula like for your business, is sales minus profit equals expenses. Meaning I make a sale, I take my profit first, then my expenses are what's left over. So that's where you make sure that profit is a part of your business. It's a part of every deal that you do, and it's becoming a habit. Make profit a habit inside of your business. Build good habits of making sure you are healthy from every single deal. And I'm not saying you have to take a huge profit, but like making sure that you're thinking about that first, because if you don't, then you'll run out, you will run out of the money. You will run out of the opportunities. You won't be able to capitalize like you want to, and you won't be able to, move your business forward. So it's that formula: sales minus profit equals expenses. But the big thing with that is that I feel like as a real estate investor, entrepreneur, we've heard that message before. And like Rich Dad Poor Dad, he says, pay yourself first, like over and over again. And like tells these stories of him not paying other people, and he would make sure he was paid just to get into that habit. And then we've heard it like Richest Man in Babylon, a portion of all I have is mine to keep, like these different types of books or masterminds, or like we get around these people that have the same philosophy. But that's where I feel like Profit First takes it a step further. It says, here's how you actually pay yourself first. Here's the practical steps with it. But if nothing else, you get from this that the mindset, that shift in mindset again of, I need to make sure I'm profitable and make profit a habit on every single deal that I do and everything that I do, then it's going to make my business that much better. And it's almost like that mindset shift again from Rich Dad Poor Dad of not being in the rat race, then in Profit First of like not only not being in the rat race, but like staying out of the rat race. Like don't build yourself a bigger mousetrap here by going into real estate and then living deal to deal, because we have the same mindset as we had as an entrepreneur or a W-2 employee, then bringing a lot of that over into the business world of like, no, I have to pay all the expenses, or I have to do all this first before I take my profit. So that's the big mindset of Profit First. And there's also the big practical side as well too.
Yeah. And that's huge stuff too, just because like a lot of guys think, oh, I got to reinvest. We're going to keep making it big. And then what happens if the world shuts down due to some unforeseen thing? Like if you don't have any money set aside for yourself, that's huge. So yeah. Talk about the other side of it a little bit on the practicality side too.
So how do you make this a habit? So how do you actually see this mindset come into being? How do you actually make Robert Kiyosaki sound like intelligent on like pay yourself first, and not just like, what does he mean by that? So how do you make that a reality? For the big step, because I give several steps in the book, but I want to give one big step here, is The biggest mistake I see investors make is having one bank account where everything goes in, everything goes out. You're tossing a cash salad all the time. Like that's where you have a bunch of money one day, feel like a king or queen. The next day you have no money in that bank account. You feel like a pauper. Like, where did all my money go? Like we were talking about. And you don't have control. Like you don't know, can I spend money out of there? If I do I have to feel guilty about it? Or should I, spend it on this marketing campaign? I have no idea if that's going to overdraw it, like for, because I've got these other transactions coming out. So it gives you a lot of anxiety and stress. And when you only have that one bank account and you have no control over that money. Money is one of the most sensitive areas. I mean, like that's one of the biggest causes for divorce, for partner split ups in business, like just the money aspect. So that's where this Profit First comes into play to say, here's a simple system to get your head around it so you don't have to worry about it as much. And so what you do is instead of having one big bank account where everything goes in and out, not having any control over what's going through there, I suggest, and the Profit First philosophy is you split out those bank accounts. And it's kind of like the envelope system. And you've heard of the envelope system, like for your personal finances, you put them in different, envelopes, and then you're only using the cash from those envelopes. Or, Dave Ramsey's made that popular, or other people, or you might do it for your personal finances if you're listening. But that's where in your business, you need your own, envelopes, and you need your own bank accounts that are working for you. I call the first 3 bank accounts to open up the golden trio of accounts. So that golden trio is that terminology comes from because I love movies. I love the big epic saga stories like Star Wars and Harry Potter and all that stuff. So I like Luke, Han, Leia always pushing forward for good, making sure the light side wins in the end. And, all those stories have the hero's journey and making sure that the good wins. And they've got those 3 main heroes that are in those big sagas. Well, your business is your story. It's your epic saga that you're creating right now. And you need to make sure that you have 3 heroes that are always making sure you win in the end. It's about your business is your legacy. You need to make sure that you don't run out of cash and that you are healthy. So that's where these 3 accounts come into play. So what are those accounts? Number 1, the profit account. Number 2, the owner's compensation account. Number 3, the owner's tax account. So those are the 3 that are working for the business owner. And the difference between them, profit is for the reward of the, like the sweat, blood, tears, the hours that you work, all that to make sure that you have a reward every quarter that you can take a draw from, or that you can make sure that you have an actual profit, cash profit from your business. The owner's compensation account is more for you, the business owner, to pay yourself a regular salary or a W-2 like from your business or whatnot to take draws weekly or bi-weekly or monthly or however often you need to get paid. But that's to give yourself a regular salary for the work you do in the business, because you're probably still going to be working in the business until you're completely out of it, and have everyone hired that you want to. Then the owner's tax account is for you to save for your taxes throughout the year, instead of coming in tax time and being like, oh, shoot, my tax bill is due. I got to pay this right now. So making sure that you have that stress off of your plate with the owner's tax account. So those are the core golden trio of accounts. I also tell people that, and there's an income account where I call it the control account, where all money goes into, what any types of deposits go in there. And then you are pushing the money out from that account to the other separate bank accounts. So that way now you're controlling your money instead of your money controlling you. So you put it into that control or income account, and then you're pushing out to profit, to owner's comp, to the owner's tax, and then to the operational expenses, which is that other account that you already have set up to pay the expenses of the business. So those are the fundamental accounts of, here we go. Now I can see, now I have a clear picture. What is mine, this golden trio? What is actually coming into my business? So that way I know what I can apportion out. And then what are the expenses of my business? And do I have enough to now go out and do that marketing campaign or hire this person or whatever? It gives you great clarity now, because you're splitting out that money and you don't have to worry about, oh, shoot, I need to take $1,000 out of my bank account. Can I do that today? Like my daughter's getting braces, and I need to go put the down payment or whatever it might be. It's like, now this is mine over here, these golden trio, and then what's over here is to run the business. So getting that, once you get that in place, then you start to see the mindset of sales minus profit equals expenses, and pay yourself first, and a portion of all I have is mine to keep, come to fruition, come to reality, and say, now I'm making profit a habit. Because anytime a sale happens or rental income or whatnot, you're making sure that from that income account, you're pushing it out to those other accounts and being in control of your money. One of the biggest pushbacks I get is that's a lot of bank accounts. Like, what are you talking about? So I tell people the whole point of the system is to make profit a habit. So at least go out, set up one bank account, even if it's like an online bank like Charles Schwab or something, where you can literally set up an online account in like 20 minutes, where if you can set up one account, call it profit, transfer 1% of all income, and get into the habit that when a deal closes, 99% can go over here, but 1% goes to that profit, and at least start getting into that habit as soon as possible. So that's where I tell people, like, if you can at least do that, I will count this podcast a success. Like, go out there, because a year from now, you'll look back and say, I'm glad I opened that account, got into this habit, because I have more money than I've ever kept. I've made more money than I've ever made, but I've kept more money than I've ever kept in my business because I actually have a system to manage that cash now. So that's the practical side that really helps with make the mindset a reality.
Yeah, and that's huge too. Like, even it's only, you're saying only even 1%. Like, normally you're not even going to miss that money if you transfer it right when you bring it in. Like, you're going to think, and then you see it building up at the end of the year. You're like, 1% turned into that. Like, that's huge. Right.
Exactly. Especially in the real estate world. If you're in real estate investing, you can make some good money, whether it's wholesaling or wholetailing, fixing, flipping, whatever it might be, buying the rentals, refinancing, you're going to make money. You might as well learn to keep it and be able to have that money there if opportunities present themselves, or if a downturn comes and now you're the one that's buying all the properties for 20 cents, 10 cents on the dollar, or like whatever it might be. So yeah, it's huge.
Yeah. And you know what, even peace of mind too, like, especially like having money in the bank, you have peace of mind, but then also you're talking about taxes. Like, if you're pulling that money out, I know I scrambled before. You get those big tax bills. You're like, oh crap. Like, I didn't expect it to be that big.
Right.
But if you have a bank account that has the money in there, you plan for it. It's like a no big deal. It's like, okay, we'll just write a check.
Yep. And that's where I devote a whole chapter in Profit First for Real Estate Investing. Reserves help grow your company, because I tell in there, one of the biggest things is, besides like private lenders love it and all that, it's the psychological effect of not having to worry about going after that next deal. Like, I've got money saved up. I don't have to go after every deal that smells like a deal, but then turns out to be a dud. This one's really slim margins, but we're going to take it down because I need it. Because then you're operating from fear and not from your purpose. You're operating from, I need that deal, versus I get to pick and choose, and I don't have to take every single deal that comes across my plate. I can cherry pick the best ones that won't take my time, headache, and like will give me the best return. So that's where I can go on and on about reserves. So you can get the book. Chapter 6 goes on and on about how it helps you grow your company.
Yeah. And that's huge. And you know what, it's funny about books too. Like, I know a lot of people read books. It's like, okay, David writes this book for $20. You get years worth of information and trial by error just for $20. It's like all compact all in one place.
Right. That's the nuts part, is going through this process. And it's like, you do. I wrote that book. It took me hours and hours, like hundreds of hours. It took 15 months from like when I talked with Mike Michalowicz to get this book actually out the door. And, and people said, oh, it's kind of like birthing a baby. I'm like, well, it took 15 months, not 9. So just not to say that it's, any comparison, but like people kept saying that. I'm like, it took way longer than I ever thought it would, writing a book and getting it out the door. So it was an incredible experience, but that's why I wrote it too, because it's definitely a passion project. Like, I'm not looking to get rich off this book. Like several thousand orders have already happened. That's great. That's not going to make me a millionaire. That's not the point here. The point is this message of like, any entrepreneur, any real estate investor can put a simple system together to make sure that they don't go out of business. Like, not only do they not go out of business, they can do what they wanted and why they started their business. So many people want to buy their freedom, or like have financial freedom or financial peace in their business and like be financially free and have their time freedom. Well, how do you do that? You buy it. You buy it with the business that you start and with the real estate investing. And like, if you have money, you can put it to where you want it and start buying back your time, whether that be in systems, whether that be in like, like in lead systems or whatnot, and getting the leads coming in, or whether that be in, like people that you have on your team. That's where you start seeing the more money I make and the more money I can keep, the more I can actually buy back my freedom and my time.
What would you say the biggest financial mistake most people are making?
So besides having the one big bank account, because that is definitely the biggest mistake I see, there's a lot I could go down this road, but the other one is probably just ignoring the financial side, ignoring the financial side at all, like not looking at the numbers, the shoebox full of receipts. That's the typical image of an entrepreneur when they first get started, going to their accountant. And that's where I feel like if people, but the reason that people do ignore it is that we're not trained on this. We aren't trained like in marketing or like sales or like all these webinars and podcasts and everything for the fun side of this stuff. Like no one talks about the financial side because everyone thinks, oh, boring, accounting, bookkeeping, transactions, QuickBooks, data, financial statements, profit and loss, balance sheet. And it's like, no, there's a better way. Like this private first system is all about focusing on the cash in your business. And I feel like if people just had this simple system, you don't have to have a background in finance or accounting or anything. Me personally, I own a fractional CFO company. I do not have an accounting background or CPA background or financial background. I basically, for the hard knocks of running a small business, sitting with my CPA for hours and that's how I knew there's a big need. Then I saw there's people in my network, I want to help them get over this fear of being, of not having that education and making it fun and making it here's where you can actually make more money and not have to learn about accounting at all. Do you look at your bank accounts on a regular basis? Good. This system is for you. It's this is where you can take something that's super simple and but is perceived as being complex and scary and take it down and drill it down to a very simple process to say, this is how I can manage my money and not be scared of the money anymore in the financial side. And I can actually look at my numbers now. And now I can go to my tax person at the end of the year because I've got a tax account set up and no matter what they say, I'm going to have the money there to pay for those taxes, so it gives you that confidence. And when you have confidence, it gives you a better decision-making process to go out there. So when you have clarity, you gain confidence. When you have confidence, you can make better decisions. And that's where a lot of people don't get that education. That's why they ignore it. But it's probably one of the biggest mistakes I see is just ignoring the financial side of the company.
Yeah, that's huge. So hey guys, go out and get this book. Like seriously, just because even that breaking out your bank accounts, that tip is huge. I do it myself. That tip is huge because it gives you peace of mind. You don't have to worry about which is one other thing I want to ask you too before we leave, David.
Yeah.
Breaking out the bank accounts, like the giving account.
Yeah,
I talk about a separate account for giving and stuff too, which is cool because then it's I know a lot of people like to give and help people out. Well, I'll let you talk about it because you.
Yeah, there's a lot of entrepreneurs. My background just as a human being and being reared by incredible parents and now having an incredible wife is I have the opportunity to give back and I want to give back. A lot of people have poured into me. So I want to give back to our community, to missions in the world. I want to do a lot of different things. I have a background in faith too. So I want to make sure I'm, making sure the things that are important to me are being funded. And that's where I have a specific account that I've set up outside those core accounts called a giving account. So that way 1% of everything that comes in goes out the door to help, the causes that we are championing. So that's where I want to make sure that, I put that in the book. That's a big part of the giving of, giving and receiving. If you want to receive more, you have to be able to give. And if you've ever read The Go Giver, I love that book by Bob Berg, and it talks about the giving cycle and there's the giving and the receiving. So we set that in our business and a lot of the people we work with set up a giving account so they can have, so that way they can go out and actually do what they wanted to do when they started their business. There's one guy that we're working with specifically wants to start a camp for, the children of his, the religious part, where he's part of, and he wanted to set that up. And he was able to give $35,000 into that account this year and start to fund that camp, and get that off the ground. So it's those types of things that why did the entrepreneur really get into business and why? And some of it, if for giving for you, maybe you don't give or whatnot, or maybe that's not a part of tithing or whatnot, I would still do a small percentage. But then some people set up a fun account, they want to do this fun thing with their family or take road trips or whatever, so just making sure that this system, even though you should do the core accounts, I love the giving account. giving back to your community, the other people, charities, foundations, whatever it is that's important to you. But then also what are those things that are important to you, and making sure that those fit in with your business and with your life as well too.
Right. And that's huge too. And if you have the money set aside, it's a lot easier whenever an opportunity comes up to help someone to cut a check versus having to find it.
Exactly. And because we're recording this around Christmas time. And so it's a lot of fun going to the giving account when I hear all these opportunities for giving and be like, yeah, we can give to that. Yeah, we can give to that. Like, this is fun. Right. Like, now we get to give back and actually make an impact and, see that happening, because there's another account and I don't have to take it from, shoot, I wonder if this will hurt payroll next week, from, giving from that money. And there's no stress about that at all.
Yeah, that's huge. So Dave, that's some awesome stuff here. So tell everyone, like, if they wanted to reach out to you and they want to get the book, where do they go? Direct.
The best place would be to go to simplecfosolutions.com, because on there we have a place, tab at the top for the book. We have a podcast, Profit First REI podcast as well. So you could go there. For that, we also have the services, the fractional CFO services that Bryan was asking me about at the beginning. So if you're looking to implement Profit First, get clarity around your numbers and keep more of it, you can go there as well too. It also has my Instagram and Facebook, like if you want to connect on social media and all that stuff too. So the one-stop shop is simplecfosolutions.com.
All right, cool. So yeah, anyone interested, number one, go out and buy the book. And if you need help with fractional CFO or any number stuff, hit up David. He's the guy.
There you go.
Hey, so until next time, guys, go out there and crush it. Thanks for coming, David.
Awesome. Thanks for having me, Bryan.